What's up, good people? Jungle Inc. here, hope you're doing well. New SEC attack on the crypto space, and if you ask me, they got Ripple on their mind with this one. What convenient timing. As the SEC looks to expand the definition of broker-dealer, and in today's discussion, what are they looking at? AMMs, just exactly where Ripple's looking to take their business, their payments. The expansion of the broker-dealer definition would go into effect 2025 and will require decentralized exchanges, AMM pools, that control more than $50 million in capital to register as a securities dealer with the SEC. What if the thing being sold isn't a security? XRP, that's a pure commodity. Why the hell do we have to register with the SEC over that? Mighty convenient timing if you ask me. Now, Hester Peirce says one of the reasons why people are not compliant with SEC rules like this new change to the expansion of the broker-dealer, one of the reasons why decentralized exchanges and AMMs may not be able to register is, well, people are not compliant because they can't figure out what the rules are. And if she was being totally honest, that's because, well, there are no rules. The minute you adjust your operations to be compliant, well, just like we see here, isn't it? They just want to change the rules so you're still in non-compliance, so they can still go after you, so they can still sue you. Those are not rules. That is a rogue regulator that's making it up as they go along. Now, it's not just the crypto space the SEC is going after. It's also artificial intelligence. SEC has a draft rule regarding AI and financial advisors. The SEC claims they are trying to make AI tools safer and unbiased, but Ted Cruz is currently trying to round up support to block this rulemaking. Ted Cruz saying, and this should sound familiar to those folks in crypto, new technologies over the last decade have allowed more Americans access to the stock market than ever before. Waging a war on technology, the SEC hurts the investors they are supposed to protect. Now, I want to be clear about my opinion about XRP's path forward here. Now, I want to be clear about my opinion about XRP's path forward. Payments are still the original problem that blockchain set out to solve. It's an important and valuable problem, and I don't think we should add any new feature sets that makes XRP any less lively or capable of solving those payment-based problems, speed, cost, things of this nature. Just because it's not the hot button topic that everyone's looking to invest in at the moment doesn't mean you abandon that one. It's massive, it's huge, and it's a significant problem that will add value to the world if you can solve it. You gotta go after it. What I'm saying is it's time to stop leaving valuable use cases that the XRP is well capable of competing, leaving those use cases uncontested. Now, I'm not talking about full smart contracts here. I think that would rob XRP of much of its utility and its value. But there's a ton of functionality between Bitcoin and Ethereum where XRP can sit. And David Schwartz has told us there's a lot of competitive advantages with the XRP ledger in these various realms, starting with the built-in decentralized exchange. And that sucker was neglected for the longest time, for years, and now they're paying attention. They're sprucing it up with new capabilities, starting with AMMs. And I think you have to do that. If you listen to David in that spaces, he's like, it's not an or thing here. It's not like we can do just payments or DeFi. We can do them both. There's going to be a limit to how much stuff Ripple can do, of course. They can't do everything, but there's a heck of a lot more that they can expand into. And I'm excited to see them and other developers on the XRP ledger take this seriously. Go out there, compete, because XRP is world-class at a ton of things. Speaking of new feature sets, there's some debate in the community. The AMM feature set, well, a small bug was found there. David said not a big deal. Probably will never come up in practice. They can put some guardrails up, so no one's going to run into this issue. But on Ledger saying, hey, if it ain't a big deal, fix the sucker, get rid of the bug, go through this one more time, make sure there's no errors, and then resubmit it. Which side is correct here? Is this something that we just kind of patch around and roll it out? Or do we have to go back to the drawing board, do a full review, fix everything, and then put it up for vote again? Look, I respect David a whole lot. Of course, I wouldn't be an XRP investor and I also expect on ledger. So what's the answer here? This is why we have a decentralized ecosystem where people will vote on this issue, and I trust that those validators that are able to vote, they're going to make the right decision here, and they won't push it through just because Ripple says so, or if it's actually good to go and this is not a major issue. I don't believe they will hesitate to let this thing go through. I'm not a developer. I don't run infrastructure. I can't tell you one way or the other. I just gotta trust the process here. No surprise, today it was announced Solana had a 5-hour outage. And I still stand by my original opinion about Solana, that it's likely a good trade. And I said that when the price was really low, and now that it's run up, I still say it's probably a good trade. You see all the interest, all the activity around it. But I say it's not a great layer one. They focus on vanity metrics that don't really matter, but neglect the underlying foundation, and it's quite shaky. I think at best, it eventually will be a layer 2 of Ethereum, again, at best, but that doesn't mean it's not a good trade. So it's one that I choose not to invest in, not talking smack about it, but this is just another example. This is not a great blockchain. It just isn't. I don't care who says it is, Kathy Wood, whoever. It's not great, and that's just a fact. Bitcoin ETFs see 700 million in net inflows. BlackRock and Fidelity continue to roll here as Grayscale liquidations just won't stop. New US ETFs have amassed 7.7 billion in funds under management, but also incumbents have saw 6 billion in outflows. This is just traditional finance rolling in, deciding, you know what, we want to capture a big part of this market. So far they've been able to. I don't think Grayscale can bring their fees down to an acceptable level. The bleeding's going to continue. Does someone acquire them? Huge partnership announced today. Robinhood and MetaMask partnering, so users can leverage Robinhood's low-cost order engine, providing a secure, user-friendly, and self-custodial approach to Web3 adoption. This could really be a big one. Ethereum Joe Lubin, Robinhood, both of them could see massive benefits here. You want to talk about an unparalleled experience, being able to trade right from your self-custodial wallet and a MetaMask wallet, but leverage that liquidity of a centralized exchange. And it's just as big of a win for Robinhood. I can tell you this, I don't use Robinhood for crypto trading, and really I don't even use it for stock trading, but this gives them some street cred, if you will. I'll have to, see the specifics on this, test it out, but if it's good, heck yeah, I'll use it. Could be a real game changer. Fed Chair Jerome Powell warning that the United States is on an unsustainable fiscal path. Thanks a lot, Captain Obvious. Stating that the national debt is becoming a danger to the stability of the U.S. economy. Of course, not offering any real solutions. The national debt now stands at $34 trillion and counting. Powell added that now the U.S. economy is in a solid position. Of course it is, right? Now, Elon Musk has pointed this out. You can't just continue issuing debt to infinity. Otherwise, we would just print all the money we wanted. Oh, you need a Lamborghini, you need a Bentley, here you go. Obviously that doesn't work. There are going to be limits to this, and we have far past those limits. We understand this if we're in crypto. And remember, the value of crypto, it's not just utility. That's a big part. What are the problems you're solving? What is the value of that? But also as a currency and geopolitical hedge. So something to keep in mind here. As we see things get more and more out of control, people trying to get away from irresponsible fiscal policy and also geopolitical problems, and we got plenty of both in the world today. Crypto is just going to become more and more popular. Same kind of theme here. Reuters reporting that the BIS issued a warning that pension funds and other non-banks have more than 80 trillion in off-balance sheet debt. Can you imagine when eventually we have a serious downturn? And it'll happen someday. I don't know if it happens tomorrow or how long. Thus is life. You're born, you die. Economies have boom and bust cycles, and it's been a long time since we've had a real bust here. Think of this, California State Teachers Retirement Fund. I reported on this a few weeks back. They were running around trying to get a $30 billion loan to maintain liquidity. How are they in that much trouble right now? Bonds are paying, high interest rates, investments are going up. What happens when we really hit hard times? If they need $30 billion now, what are they going to need down the road? And we see CalPERS now, California's largest pension fund. They have massive unfunded liabilities. Big ticking time bomb here. And so they are exploring Bitcoin and crypto as an avenue to fill that gap. Here's another area where, crypto can step in and help. If you remember that Fidelity report that I shared with you, I've shared it a couple times on here, what they are pitching to pension funds, endowment funds. It's just as reckless to have no crypto exposure as it is to have everything in crypto. You have to get off zero, and actually by putting 1 or 2% of your portfolio into crypto, you can actually lower risk and increase returns, and you just can't not do that. And guess what? With ETFs now, they have an avenue to do so. Doesn't mean they're just going to pile in today, but you're going to see money start flowing into this space soon enough. And again, CalPERS, one of the very big ones, looking very serious at cryptocurrencies. And they're going to have to become more aggressive because they're in big trouble, as are a lot of people out there, a lot of, pension funds, retirement funds, just companies, people. There's a lot more turmoil out there than people are telling you. Cathie Wood predicting that Bitcoin ETFs will cause many investors to start substituting gold with Bitcoin. This trend should accelerate, she says, now that all investors have easy access. Before recording this video, scrolled through the top 50 assets. Not a lot of note here. We have Hedera up about 4.5%, and we have Monero down 29% on the 24-hour. I don't know if there's some news that broke out about Monero or anything significant or what's going on with that one. I'll have to check into it. Other than that, everything's pretty flat. We're waffling about. And eventually, we're going to break one way or the other. If we break up to the heavens, let's pop some bottles. We're making money. If it goes down, that's an opportunity. I can't read the tea leaves. I can't read the charts. I'll leave that up to other people. But either way, I'm prepared. I'm ready to strike. Let's just sit back, watch this develop. We won't do this sideways trading forever. Our day will come. Let me know what you think down below. And as always, please like, please subscribe. The revolution will be televised right here on Jungle Link.